Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and it's December 29th, last day of the month, and last day of the year. Wow, what a year it's been here. 2017 is wrapping up today. Now, we have nothing on the economic calendar today. As you know, New Year's will be on Monday, so the markets will be closed. Today, the mortgage-backed securities market, the bond market, will be closing at 2 o'clock East Coast time, 11 o'clock a.m. Pacific Standard Time, and stock market will be open normal hours today. Today we got some really light trading going on. The stock market did start up the day a little bit ahead, and then since it's kind of pulled down a little bit. But for the month, it's up. So this is almost like, I believe it's like 12 months consecutively that the markets have been up every single month. The Dow, I believe this is a record. I don't know if the record, but it's the longest streak since 1959 that they've had a positive month each month going upwards. So now that we've got the tax bill passed and the government spending moved over to January 18th, I believe it is. The next thing on the docket, it sounds like there's some whispers out there that the Trump administration will be looking towards is the $1 trillion infrastructure spending bill. Now, this could be the next catalyst that we've been kind of looking for that could kind of move the markets a little bit. And so kind of keep an eye open uh, on this. This might be this is more of the whispers, but this might be what they're looking for later on here. So again, today's a real quiet day today. Not really much going on here, but again, I just want to give you a heads up going into the new year. This might be what you want to keep your eyes on. More information on this, and this could be what drives the market after Republicans were successfully able to get that tax bill through. So let's take a look here at the bond market. Bond market's doing pretty good today. Currently, we're up at 9 basis points, but we kind of fluctuate between 13 basis points and 9 here. And as we can see, we got the 25-day moving average, and we have the 50-day moving average here, creating resistance for us. And it pulled back. So since I've been doing this, it's kind of creeping up in the middle here and stuff like that. So it's just been kind of going back and forth, back and forth. So we'll know obviously by 11 o'clock Pacific Standard Time as to where it finally lies. But so far it's up about 9 basis points. Not quite enough for a price improvement today, but as the markets will be pretty quiet and they'll usually kind of hold back a little bit heading into the weekend. You may see a little bit of a late surge heading into a long weekend in the bond market. Usually that's a flight to safety and in case anything happens over the weekend. So here's the 10-year Treasury. As you can see, we're kind of crossing this floor support, and which we closed on Wednesday, but we went slightly above yesterday, and now we're kind of working our way back down again. So we're right around the 2.42 range, where this is at the 2.43 range, and on the Treasury here. So again, we're kind of still a long ways away from like the 200-day moving average, which is what will be needed to go below the 200-day moving average to get any serious changes in the interest rates. But again, I don't expect a whole lot of changes in rates yet. Long term, yes, rates will be going up. We'll have less government spending purchases as we do the Great Unwind, which was released September, I think it was, as the government or the Fed will stop renewing the bonds and treasuries and buy less of this. So it'll be a little less demand for these products. But at some point, there will be some type of pullback on the stock market, and that could help the mortgage-backed securities as well. So again, probably not a huge change in rates. Probably in the 3/8 range difference you might see for the year, difference from where we did see for the year this year. But again, we'll see some fluctuations, of course, but the highs and lows. But probably the overall high be probably like 3/8 range. But the other big news to watch for, again, as we've kind of talked in the past over the past month, is the yield spread. Yield spreads, how the Fed's been raising rates in the long term. It's starting to catch up to where we might have a flat, and then of course turn into a negative. And when that turns into a negative yield curve, that forces us into a recessionary period. So that's something to keep an eye on. Where that spread right now between the long-term and short-term is about 53 basis points, and that's been shrinking over time here. Just about a month ago, we were about 60 to 69 basis points. So again, something to watch for this year. All right, so we'll kind of wrap it up today. Get you onto your weekend, and but if you guys want to get more updates, just come over to Twitter. Find me on my handle, Mike Bjork. I wish you guys all happy New Year's. Hope you guys wish you well, and hope you guys all your wishes come true for the new year as well. Thanks so much for watching. I look forward to see you guys on Tuesday, January 2nd. Take care, and again, happy New Year's. Bye bye.